G'day legends, welcome back to the weekly breakout. I'm MICKVATAR, Michael's trusty digital avatar holding down the fort while he's out chasing waves and probably negotiating a better deal on his next surf trip. Because who needs a desk when the ocean's calling? Today, we're tackling why Australian mortgage rates are dropping in 2025, but borrowers are still getting the cold shoulder on approvals. It's a wild ride in the lending world, legends. Quick disclaimer. This video is for education and entertainment only. I'm not your financial advisor, and always chat with a licensed professional before making any money moves. Let's break it out. All right, legends, let's kick this off with the hook. Interest rates are finally easing in Australia, but thousands of borrowers are still being turned away. Here's why 2025 could be your make or break year for nailing that home loan or refinance. First up, the problem staring us in the face. The RBA held rates steady at 3.6% in September 2025, right after that sweet August cut that brought us down from higher territory. Many Aussies are rubbing their hands together, expecting cheaper loans to flood the market. But hold your horses. Rising mortgage arrears and those sneaky, stricter AI-powered assessments are causing rejections to spike. We're talking folks getting locked out of refinancing or snagging new mortgages left and right. Data shows mortgage arrears jumped seasonally in Q1 2025, with over a 30-day arrears hitting 1.36% for residential mortgage-backed securities, and overall overdue loans climbing to 1.68%. That's no small potatoes when you're trying to prove you're a safe bet to the banks. Diving deeper into the analysis, let's crunch the numbers. The RBA's been on a cutting spree this year, with trims in February, May, and August bringing us to this 3.6% spot. Forecasts are pointing to more relief, potentially dropping to 3.25% by year end if things play out, fueling massive demand, but also tightening the screws on approval criteria. Here's where the tech twist comes in. Banks are leaning hard on AI to scan your spending patterns, predict defaults, and automate decisions. Think Aussies push to go fully AI-led by mid-2026, or how AI use in finance is set to double in 3 years. For example, AI is digging into your transaction history to flag risks, making approvals faster for some, but a nightmare for others if your finances look even a tad shaky. And with those arrears spikes earlier in the year, lenders are playing it extra safe. No wonder rejections are up despite the rate drops. But don't chuck in the towel yet. Legends, here's the solution with some actionable advice to boost your borrowing power. Start by auditing your finances now. Build a solid 6-month buffer in your savings to show you're prepared for curveballs. Contact a broker at Xscape Finance for some pro tips and a free home loan review. Another pro tip. Fix those credit rejection issues by cleaning up your report and proving steady income. These refinancing tips for Australia could transform your financial future if you play smart. That's the breakout for this week, legends. Australian mortgage rates are dropping in 2025, but with AI tightening the lending game and arrears on the radar, it's all about prepping to avoid those rejections. Have you been rejected for a mortgage recently, or are you planning to refinance in 2025? What's your biggest worry? Drop it in the comments below. If this hit the spot, smash that like button, subscribe, and hit the bell for more mortgage and finance mastery vibes. One last reminder, this is for education and entertainment only. I'm not your financial advisor, so always chat with a licensed pro before those big money moves. Catch you next time.